this meeting to order, please. This is the informational meeting for the Colonial Center.
Thank you, Mr. Mayor. Thank you, Mr. Mayor.
Good morning, I'm Kim Callis.
Good morning, I'm Kim Callis. I'm the town manager. Today, this is an information meeting because there have been lots of questions about the Colonial Center.
And we wanted to invite those that were involved in the formation of the LLC and involved in the formation of the nonprofit, involved in the financial reporting and auditing to be here. We have the members of our town council here. We have the members of the CDA board of directors here. Jeremy Lynch, who is on the CDA board of directors, could not be with us, but he is joining us via Zoom. LJ Dornak had a conflict. He chairs the Board of Equalization, and he could not be here. This meeting is being broadcast via YouTube. Jeremy Lynch will be participating with any questions by Zoom. But this is for the council and the CDA board member to hear some information and to ask questions. So today we have with us Alex Simon, who is an attorney in Richmond, graduated from UVA undergraduate. He's in law school, and he's been practicing in Richmond, focusing on matters like this since 1978. We also have with us Brad Reitelhoover. He has law degrees from the College of William and Mary and New York University, and he focuses on taxation and nonprofits. So they are both here with us today. Dan Gecker had planned to be here. Dan and Alex very closely on the formation of the Colonial Center LLC. But due to circumstances beyond his control, Dan could not be here, but he has answered a number of questions in advance that people have submitted. And thank you all for submitting those so that we could get some information out there ahead of this meeting. What we'd like to do is start off and ask Alex to give an overview about the purpose and formation of the Colonial Center LLC, and then we'll follow that up with Brad's comments, and then there will be time for questions and answers. So, Alex, with that, I will turn it.
Mr. Mayor, one quick question. We doing questions and answers. Are we allowing public input in this meeting?
This was for the council and the CDA to answer questions, because those are the folks that have to make decisions moving forward.
Okay.
So.
Would you like to hear that?
Here's fine. And also we have with us today Robin Jones and Kim Jackson with Craiglin Jones Associates, because they have been involved in the financial reporting. Thank you all for being here.
Mr. Mayor, Kim, it's good to be here. It's good to be here. It's good to see the Colonial this morning. It's good to be out and about this morning. I have to put my mind back to 2008, and so I pulled the file. Essentially, I think Dan answered most of the questions by email. But what I want to reiterate is that Earl and Dan got together. First thought was there's potential for state and federal historic tax credits can help the renovation of the Colonial. Well, Dan's the expert on historic tax credits, and it's pretty black what they call black letter law. To get historic tax credits, you have to be a for-profit organization. Can't be a 501c3. 501c3s don't pay taxes. So what's been done? This was not a new strategy in 2008. All over the country. It's been used all over Virginia. It was used in Appomattox, Regional Governor School in Petersburg. Maggie Walker and Richmond. One of my daughters went to. What you do is you form a for-profit entity, which in this case, the simplest way to do that was to form an LLC. And that for-profit entity takes control of the entity that's going to be restored. In this case, for Colonial. And it took control by way of a 40-year lease. The IRS says if you've got a lease that long, then we consider that you own it. So the way that South Hill stays in control of a Colonial and doesn't have to give it up to the tax credit investor is by forming some entity. In this case, it was a managing entity. Originally an LLC, and then said tax-wise, it has to be a corporation, so we made it a corporation. And that corporation runs the LLC. It's the manager, controls everything. But officially, and by the book, the investor controls 99% of the profit interest of the LLC. The reason the investor has to own 99%, profit interest of the LLC, is so the investor can take 99% of the tax credits. And I don't know the exact amount, but I know it was hundreds of thousands of dollars put in by the investor. They paid. Yes, we can hear you. I hope you can hear me. The investor doesn't control the running of a Colonial. The investor doesn't want to control the running of a Colonial. The investor wants to be able to say on the tax return, I've got a 99% profit interest in this LLC. Now, because that's a vacant take, the historic tax credits on the federal and state taxes. Then money was put in. That together with Earl knows these details. Kim knows it much better than me. I don't handle the numbers. Together with I understand tobacco company money, and town money, grants. All of that went to renovation of the theater. And the pot got that much bigger because the tax credit investor was in there. And that's the long and the short of. Now excuse me. Springtime allergies driving me nuts. Thank you. I turned Kim down on water thinking, but I will take some. So things went along. Tax credit investor got the benefit. CDA, Colonial got the benefit. And but now it's time. And this is what Brad is dealing with. Now it's time. Okay. Now it's time to say, tax credit investor, thank you very much. Tax credit investor, thank you very much. Go on your merry way. There's actually a 5-year look-back period where the IRS can look at all these transactions. And we're way beyond 5 years. We're way beyond 10 years. So there's no reason for this not to be a 501c3. There's no reason for this not to be a 501c3. It couldn't be a 501c3. But it couldn't be a 501c3 if you wanted to get the start. If you wanted to get those the benefit of that tax credit money. The benefit of that tax credit procedure. And there's a really strict procedure. Your CPA is locally audited this. There's a really strict procedure about how you qualify for this. You have to have what are called qualified rehabilitation expenditures. Or QREs. Books are looked at, and it has to be for use, and it has to be of the theater. Use of the theater. It can't be for taking somebody to lunch. It can't be audited. Strict rules about it. QREs audited. That's what those QREs. That's what the investment of a tax credit investor is based on. The amount of the QREs. Well, I think, frankly, regarding the Colonial, regarding Colonial. I think it beats the Beacon. Great theater, a great job. I think it beats the Beacon and Hopewell. Bird probably beats my hometown. Not as big, but Bird theater, though it's not as big, but it's pretty much done. It was done a long time. But my job is pretty much done. It was done a long time ago. Come down and answer any questions people had. Come down and answer any questions people had.
Great. Well, thank you for having me today. My name is Brad Ruddle Hoover. I'm a partner in McGuire Woods in Richmond. My specialty is to help nonprofits accomplish their mission. The people I get to work with want to make sure the people I get to work with want to make sure that they follow the law and they are able to provide whatever their mission is to the community. So I was excited to join this team to work with the Colonial to carry out its tax-exempt mission. So we formed an entity on April 22nd. So we formed an entity on April 22nd, 2021 that is intended to take over the Colonial Center and the theater. So that entity was formed with the state of Virginia. So that entity was formed with the state of Virginia as a non-stock corporation. What that means is there's no owners, and it's intended to be a nonprofit. Most of you are familiar with what we call 501c3. That's the plan, and that's the goal. And it was just recently formed, and the purpose of the Colonial Center, which is the non-stock, is to foster, encourage, and promote live theater and the arts through the operation of a community theater that enriches and educates people of all ages throughout the South Hill community. To stimulate, promote, and develop interest in the dramatic arts, to advance the natural culture in the field of dramatic arts, and to provide educational programming related to the dramatic arts for the general population, and that is an acceptable and appropriate mission for a nonprofit. So my understanding from the owners is they are willing LLC to donate their interest in the LLC to the nonprofit for their entire ownership interest in the LLC. Their entire ownership interest in the LLC, which means the nonprofit would take over all of the assets current LLC and they are going to current owners of the LLC get nothing out of that. The owners of the LLC get nothing out of that as far as which is good because the nonprofit doesn't have any assets. Which is good because the nonprofit doesn't have any assets yet. So it's going to be able to take it over and then run the theater on a nonprofit basis using the assets it has in perpetuity, and will continue for in perpetuity to operate the theater. And that's very typical with nonprofits I work with. Hopefully they have a generous is how they operate. Hopefully they have a generous donor like this situation where they can get the assets and fundraise to be able to buy the assets. Fundraise to be able to buy the assets that they need to operate their charitable purpose. And then they're going. So here they're getting them for free, and then they're going to operate. So that's the big picture. I didn't see any specific. That's the big picture. I didn't see any specific questions towards my area. Start on my questions, but I'm happy to start on my questions, or we can get Alex back up here if you have specific questions about that. But I'm very excited to work with the team that's going to put this together. I spent a lot of time at Hanover Tavern. Beautiful theater. I spent Barksdale Theater up in Richmond, and I very much am a fan of the arts, and so I'm glad to see the town is excited about this and looking forward to having this continue in existence.
I have a question. With the recent formation on April 21st,
yes, sir.
understanding that the combination of IRS attorneys and accountants can sometimes be part of perpetuity, it can take a while, right? So
Yes.
is it feasible that the transition to the charitable organization can take place before June 3rd?
It can happen tomorrow. The way it works is you do have to apply for tax exemption. I think that's the process you're thinking about. And that's a process where you must submit to the IRS certain information about what you plan to do with the nonprofit to confirm that it is going to be operated on a charitable basis and meets the 501c3 rules. The IRS recognizes that sometimes it's a cart and horse situation. So you got to get started, but you got to get the application in. And so they allow you a period of time of 27 months to submit your application. And as long as you do it within that 27 months, once it's approved, it relates back to the date of incorporation. So there's different options. I think the strategy here is to go ahead and get started because I feel like there's very little risk that this would not be approved as a 501c3. I mean, it's a theater and it's a community theater, which is exactly what 501c3 contemplates in the arts, promotion of arts area. So yes, it can be started as soon as the donors or the LLC owners transfer their interest to the nonprofit, and then you can rock and roll.
Thank you.
Yes, sir.
Okay, so, so that everyone is clear about moving forward.
Sure.
In large part, the town of South Hill funds the South Hill CDA.
Sure.
The CDA is the owner
Right.
of the building
Yes, sir.
and has the long-term lease.
With the LLC.
What are the essential steps that the CDA needs to take to move this process forward?
Sure. Well, the current plan is for the donors to contribute their LLC interest to the nonprofit. So technically, the lease will still remain with the LLC. We can decide to liquidate the LLC and the nonprofit would become the tenant or the lessor. We don't have to eliminate the LLC. So it depends on which structure we go with. But if we leave it as is, there's nothing necessarily for the CDA to do because you still have a lease that's in existence with the same lessor. But I like simple.
Okay.
And I like to keep things simple because nonprofits have a mission and they need to spend money on the mission and not lawyers and complexities and accountants. No offense to our accountants. I'm also a CPA, so I can say this. My goal is not to spend money or waste money. And so I would probably recommend that we liquidate the LLC and just have the one nonprofit and not have layers of complexity because that's not necessarily the best use of the money. However, we don't have to. And if we don't do that, then there's not anything technically the CDA has to do with respect to the lease because we still have the same parties involved.
Okay.
So that will be something we can decide later. But if we did liquidate, then we would want the CDA to approve either the assignment or some sort of transfer of the lease to the Colonial Center, the Virginia non-stock nonprofit.
And there's also been questions about a credit line note. And do we need to do anything with that?
To the extent there is a liability that is still valid and outstanding, the CDA would have the option of forgiving that liability. It would be to a 501c3. I think obviously you all realize and recognize that nonprofits are always struggling, and in 2021 I do a lot of advice on charitable giving and in addition to helping nonprofits, and nonprofits are struggling. Raising money in a pandemic has not been easy and the finances have been tight. The good news is stock markets and other things, to the extent nonprofits had investments, has been helpful, and that's kind of buoyed some of the difficulties in raising money. But yes, to the extent that the Colonial Center could be propped up with some sort of cash without having to pay a liability, that would set the Colonial Center in a much better position to, deal with any cash flow issues as far as if there's difficulty in fundraising. We don't know when we'll be able to have live theater. It sounds like Broadway's coming back in September in New York, so maybe that means local theater can come back too. That's the hope, obviously, and that'll generate funds from the ticket sales. But definitely, to the extent there is any liabilities owed by the LLC currently, then yes, it would be great if the Colonial Center did not have to repay those.
Piggyback on that
Sure.
question.
Yes, sir.
You said it was a liability. It's a note there that that's accruing interest. So explain to me when you say there's a liability. Is that the building the way it stands? Is that cash? Is that money owed? What is the liability?
So my understanding, there was a promissory note that was entered into back in 2008, I guess.
There was a note, it was increased, it was originally 3 million, it was increased
to 4.5.
Well, up to 4.5, the way we were, because I don't know the exact number. I think Earl has a better feel. Is it around 4 or 3.8? Yeah.
But to the extent there's any,
it didn't get to 4.5, but it went over 3.
But to the extent there's a liability of any kind.
But that's monetary. That's not the way it was explained. That note represented, or whatever it was stated, it represented the way the Colonial stood, just like it is, with all of the chairs, the lighting, everything. It was like what's the word I'm trying to use?
Appraised value.
Yes, sir. Thank you, Mr. Taylor. An appraised value. That's what we were told, that it wasn't a note involved. involved, there was no monies involved, it was just the way it was there.
My understanding,
Value.
sure. My understanding is there was a loan transaction, so that means there was money transferred from
Yeah, there was money coming in.
to the CDA because it
The
had to come.
CDA was a pass-through entity.
Right.
And grants, tobacco commission money came into the CDA, it paid the contractors, it paid for all the renovation. That's how we had those qualified rehabilitation expenditures I was talking about. It was real money went into fixing up the Colonial.
So I guess my
And there is a note reflecting that. I do have to tell you, to be very honest, the note has gotten stale. What I mean by that is that note, if you went to a court of law, would not be collectible because the 5-year statute of limitations is passed. So it's not, it can't be enforced legally.
Do we know what the balance of that loan is?
I think the CDA books have it.
Yeah.
I believe it's
3.8.
3.8.
Some of the CDAs. I think, because I shared the information
Yeah.
with everyone. So the funding for the Colonial renovations
Right.
came from a variety of sources. It came from the town's general obligation bond. It came from the Tobacco Commission. It came from VDOT money. It came from HUD.
Right.
And so all those monies went to the CDA as a nonprofit organization.
Mhm.
And then as the renovations took place, the CDA, at the request of the Colonial Center, would take some of those dollars and transfer them to the Colonial Center so that the Colonial Center could pay the contractors for the renovations, pay for the seats, the lights,
Right.
whatever. So the CDA
I don't think we can close the door.
never actually, I guess they just transferred dollars that were donated. Yeah.
So I think the short story is that yes, the money came into the CDA that was used to operate, but to transfer the money, because obviously a CDA can't give money to a for-profit,
Well, no,
it loaned.
I totally
Yeah.
understand that, but again, the perception was that it was the appraised value of the way it's set. There was no money involved. There was not an outstanding note, even though the note represented a 4.5% payback interest on it. And the question was at the last council meeting, well, why was it set up that way?
Yes.
And, you know, if it's not any money exchange and you're not making any payments back, well, why was it set up like that?
Sure.
Well, that's just the way we had to do it.
Well, let me help you with that, right?
Okay.
Because that's a difficult one, right?
Okay, yes, sir.
Yeah. So grants like the ones that he described that need to be used to rehabilitate something, those organizations are not going to give money directly to an LLC for profit. They're not going to put the money in there. They gave it to the CDA. But there was an intended purpose to the money, right? It was to rehabilitate the Colonial and use that plus the tax credit investment money, combine the two, and that's how you were able to renovate on a cheaper basis for South Hill, the Colonial. But anytime money moves from the CDA to another third party, right, because they had to pay the contractors the rehabilitation costs, the CDA, to exercise its fiduciary duty, can't just transfer money on its own. Like, there has to be some legal mechanism for the money to go. And the way it did it, my understanding, is through a loan. And it was I guess it was a revolving loan that could go up to a certain amount, but they didn't use all 4.5 million that was allowed by the CDA.
So I guess, and this was one of the questions that I asked yesterday, the total project was a little over $6 million. It's what somebody sent me back, Mr. Gepper, somebody, I think they sent me a sheet back saying it was a little over $6 million.
Actually, it was 4 million.
It was,
I think,
The 4 million was
4 million, but I'm looking at the Lynn Barber county on December 6, 2010. And I think this was attached to one of Dan Decker's answers to one of the emails.
I got it right here.
It's $4,043,014, rough numbers.
Right. So I guess what I want to convey, or make sure you guys understand, that to the extent, and I understand Mr. Simon saying that, you know, there's some questions about the enforceability of the note, but if the nonprofit had to repay that note, it could not operate. It doesn't have sufficient assets to run a theater. It would start from scratch, and that's never a good idea when you start a nonprofit, is to have no funds, because there's things that need to be done. There's performances, you want to get the expenses and things like that. So I do think, to the extent there is any question that potentially the note is enforceable, you know, I think the goal would be for that to be forgiven. If it's not enforceable, that's a different story, but that's not the question for today. I think the question for today is, we want to set up the Colonial Center as a nonprofit on a good setting, and by not having a liability, because the money that came in as a pass-through, as explained, the goal here was to make sure the Colonial was rehabilitated, and that the money can be used to make sure it operates as a community theater. And that's the intent, and that's the goal, and that's the setup that we put together, and that's the hope that the town will get behind and support, so you'll have this theater on the ongoing basis.
Real quick.
Sure.
So I misquoted, I misspoke. It was $4,034,014.
Mm-hmm.
So in addition to that, this other 3.8 would be added to this. Or is
That's
this-
the same. I think it's the same.
Part of it's all part of the same
I
thing.
said 3.8 because I was just thinking round numbers. It's actually 4. So
It's the
there
same
is
money.
There is no additional. It's 4 million, whatever that number was.
It's the same money. It's not double up.
There's not double money.
Okay.
Yeah.
Okay.
And that number, that 4 million and change, that represents the qualified
Rehabilitation expenses.
rehabilitation expenditures
Right.
that had to be approved by the Department of Historic.
Yes.
Preservation.
Audited and approved. And having litigated qualified rehabilitation expenses when they don't go well, it's a rigorous process. There's no slippage as far as spending things for inappropriate expenses, because I've defended those, and it's not fun. So yes, the IRS will put you to the ringer if you don't do it right. I didn't defend this one because I didn't have big problems, but I've defended others. Don't worry.
You have mentioned the lease.
Yes,
the
sir.
CDA long-term lease.
40-year, I believe, is what it was.
Why does it have to be, or does it have to be a long-term lease?
Oh, yeah.
Would the CDA have the option of doing a yearly lease, 2 or 3 years? Why does it have to be such a long?
Yeah, I can address that. So to do the tax credit, as Alex mentioned, it had to be a long-term in 2008. Okay, because if you don't have the for-profit as the legal owner for tax purposes, the credit structure wouldn't have worked. So you would not have been able to rehabilitate the Colonial the way you did, and as efficiently as you did with the tax money. Going forward, when that 40-year lease expires, yes, the CDA as the owner of the building could renegotiate or renew a lease on any term it wants. It could be 1 year, 2 year, 5 year, whatever you choose, once the 40-year lease has expired.
But to go back to your earlier comment of, you said that if the LLC is dissolved, then
Correct.
all that could be renegotiated.
Yes,
Could it
but
be
but we don't have to dissolve the LLC. That's not a requirement.
Am I correct in that understanding?
If the LLC is dissolved, it is possible that we'd have to. I haven't seen the lease, but I'm assuming that there's either a situation where we'd have to come up with some renegotiation.
Go ahead.
I'm sorry, Mr. Taylor. Would that be with the same party, or could it be with a different party?
Meaning, could the CDA lease it to someone else?
Yes.
Yes,
Okay.
at the expiration of the lease.
Okay.
Be absolutely clear. Are you saying that the CDA could not lease it to somebody else until after the 40 years? Is that what I'm hearing?
I don't know if there's a provision to terminate the lease early. I would assume not. Usually there's not a provision that you terminate the lease. I don't know. I mean, we can see.
By law, if both parties wanted to
Right.
terminate the lease, you can always terminate it.
Right.
But the way it's written, we had to write it this way
To get
the
the credits.
IRS tax credits was 40 years at the 40-year lease. So that's what exists, that's what help qualify
Right.
the theater to get the tax credits. Because you either have to own it in fee, or you have to have a lease that long, the IRS says, that's so long, we consider it if you want.
Right.
And that's why that was done.
Along those same lines, what happens to the assets if the nonprofit fails?
Oh, that's a good question. That's required by 501c3. You have to have in your articles a provision, and this is the only way you can get tax exemption. I'm sorry, I'm going to pull it up. Upon dissolution, the board of directors of the nonprofit must give any remaining funds to another 501c3 for charitable, literary, or educational purposes. So the money can never go outside of 501c3 world, and that's one of the requirements to be a charity. So it could go to another educational, another theater, something else in South Hill that, would have a similar mission. I mean, I think always what nonprofits try to do is to keep the money, kind of how it was intended, which here is a theater, but it doesn't have to, it can't go to a for-profit or anything like that, no.
In your experience, probably putting you on the spot, but
That's okay. That's what I'm paid for.
do private LLCs and community theater continue to need money, say from this locality, from the town, or from other entities? I know I saw in the paper the DPAC, Durham Performing Arts Center. I went by there yesterday in Durham. Get $1.5 million a year. The money's earmarked by the county to go to the DPAC. And I don't know if I think it's still a private LLC, but it may have been unwound. I don't know. But they have a penny designated, just like we had a penny for meals.
Right.
They have a penny for lodging, hotel, motel that goes there every year. Is that standard? Is that standard operating procedure? I know the Beacon, I don't know if they're set up like that.
Well, I mean, I think what your question is did the money go in, get spent for the right purposes? And yes, it's either invested or used to pay for shows, equipment, renovations, things like that. And so whatever money is in there now would be going to the Colonial Center nonprofit. And once it's there, it has to be used for these purposes. It can't be diverted. And the current owner of the LLC have agreed, like I said, to give it for no consideration. So the money is going to be going for those purposes and will be restricted in that way.
And I'm assuming, Robin, I'm assuming your records reflect that. What's happening? Pardon? Both.
We do not audit the Colonial.
Okay. You're strictly CDA.
We strictly audit the CDA.
And yours have shown reflected that in your audits.
Yes. It has,
I'm sorry.
I mean, the theater operations are not part of the CDA. The
Understand.
construction was, and we audited the construction piece.
Okay.
It was, Mr. Taylor, just on that note, it was my understanding that you all also audited the Colonial's books as well.
They do the financial statement now, do not.
Since January, we've been doing it monthly.
I can't, I'm sorry, I can't.
I think she said since January they've been doing some sort of monthly reconciliation.
Like a monthly bookkeeping, like write-up, but no audit's ever been done on this.
So you all y'all never done a fiscal audit for any council since it's been in existence? Yes, ma'am, to the Colonial LLC managing or.
Since the construction was finished and all that pass-through money was finished with the grants, and Colonial pretty much started doing productions and stuff.
Yes, ma'am.
That set of books is independent. This is a privately owned, it's a for-profit entity. So nobody requested that audit.
Okay.
Right, my understanding was the last audit was for the qualified rehabilitation expenditures and all that was done. Glenn Barbara's office did that.
And
But I don't think as a private LLC.
That was in 2010 or
2010.
10.
Because it took a few years to get all this.
That's normal timeline for a QRE tax credit.
Well, Ms. Jones, importantly, had the town council called you or written to you through the town manager and said, we want an audit, you would have, of course, declined because it's a private organization, correct?
Yeah, we would have had to be hired by ownership
Right.
in the private limited.
Right, okay, thank you.
But question, just because Cradle Johnson has not done the audit doesn't mean that one has not been done by the Colonial. You're just saying that your company has not done it. Is that correct? Okay.
And my understanding is that the LLC has timely filed all of its tax obligations. So a tax return preparer, because I'm not going to take an asset if there's risk. I'm not going to advise a nonprofit to take an asset if there's risk of problems. And they have filed their tax returns with the IRS timely each year. So yes, we're taking an asset hopefully with in good stead with no IRS problems.
I have a few questions.
Sure.
And thank you for coming today.
Moss, sorry.
Thank you for coming
Oh,
today. I
happy to come
appreciate
down.
it. Just a few questions.
Sure.
To your knowledge, is there any written agreement between the CDA and the Colonial requiring that the promissory note is to be forgiven?
No.
There's no obligation.
No.
Do you know?
Because it has to be a valid promissory note, and if you have a secret handshake deal, then that's a problem.
I got you.
Yeah.
Do you know if it's any personal guarantees tied to that note by chance? I don't know. I'm asking.
No,
I'd be surprised.
Okay.
was the note made, a copy of that note made public to the county? It's a fairly straightforward note, but I can tell you, there's no personal guarantee. It was $3 million, then a credit line up to 4.5. It was 2008 when this all started.
Got you.
Yes.
Thank you.
Mhm.
What happens if the CDA doesn't forgive the note? And if the Colonial Center or the nonprofit, I'm putting it all in one
Sure.
basket, decides just, well, if you're not going to forgive it, we just walk away. What are the consequences? I mean, what happens then?
Sure. So the CDA would have a property with no one to operate the theater.
And we've got a note that, according to Mr. Simon, that we can't even collect because it's been outside of the 5
Possibly,
years.
yeah.
Possibly.
Mhm.
All
I haven't
right.
investigated that, but it's possible, yeah. So then you'd have a theater with nobody to operate it, and the CDA would have to decide what it wants to do with it. So that would be not ideal from a
Now, dealing with the 501c3s, and I set one up, and I can appreciate how complicated it was.
forms are changing, but yes.
It does talk about in your 501c3s and dispensing money, your expenditure responsibility.
Mhm.
And I think, at least from my standpoint, the whole issue is being missed.
Okay.
And, with financial responsibility, if we're not able to see audited financials, how do we know when we're approving this money? And this is the real issue.
Sure.
How do we know where that money's being spent,
Right.
and that we're not jeopardizing the 501c3 for the CDA? We're not jeopardizing maybe the future 501c3 for the Colonial,
Sure.
and we're not exposing the town to any more liability because the town is the one that's ultimately footing the bill.
Right.
So if we're not seeing the financials, how do we 100% know that? And to me, this is the real issue. It's not about the funding. It's about not seeing the records. I understand it's a private,
Yeah.
for-profit, but we're dealing with taxpayers' dollars, and I think, and I'm not speaking for everyone, I'm not trying to, but I think we're trying to make sure that we're doing our due diligence and acting as responsible fiduciaries to answer our taxpayers' questions, that this is what the money went to.
Sure.
And right now, I don't think anybody in this room can answer those questions with 100%. At least I can't.
Sure. So once the nonprofit is formed, it files the 1023 form, right? The one that's got a lot of questions. That's a publicly available document. And so upon filing, you could request a copy of it, and we'd be obligated to give it to you.
But excuse me,
I'm gonna get there.
But that's moving forward.
Oh, I know,
I think
but-
I'm talking about the
No, it's not
back.
actually. Because here's why it's not. It has to disclose the information about the assets it receives from the LLC. So it will provide you a list of the assets it received, any liabilities, and so you will have details of what it acquired. So that's at least one piece of the puzzle. I might not answer all your questions,
Sure.
I agree, but it will have that detail.
Okay.
And then it will show you going forward, obviously the 990s and what it spends it on. As far as the time period before it acquires it, you're correct. I don't have that information, and I don't know how you would get it other than that, they filed their tax returns, and that's the only extent I know of.
I think it would behoove all of us if Mr. Callis can provide you with a copy of the lease that he provided us and let you scan over it.
Sure.
And then maybe you can do that during the meeting. Maybe it takes longer than that. And then maybe we can answer some questions because,
What questions do you have about the lease, I guess? That's different than the financials, I guess.
well, the way I read this, and obviously you're a lot more qualified to read it than I am, it talks about requirements of providing percentage rent. I mean, I'll read it.
Okay.
It's only a couple sentences. Payment of percentage rent is to be accompanied by a certificate executed by an authorized officer of the tenant certifying the gross receipts of the calendar year. Upon receipt of the percentage rent and certificate, landlord may request such supporting documentation as it deems or determines is reasonable under the circumstances, in landlord's sole discretion to verify the amount of the tenant's gross receipts. Failure to provide the supporting documentation within 1 month is a default hereunder. So I think it's some provisions there to protect our fiduciary decisions, but if it's not being provided, I think we're at a stalemate.
Okay.
And I think that's where we are.
Okay. Well, yes, if that was not provided, we can address that, Alex, or
And it may be a perfectly reason why it's not.
I understand and appreciate your question.
Certainly.
The lease has, I guess, fairly standard provision that would say, if the Colonial Theater hits a home run and gets more than $250,000 in gross receipts, it's gotta pass over a percentage, 5% to the landlord. I haven't dealt with numbers. I understand from Earl that the highest was ever 190. I have no idea that information hasn't been going back and forth. I know you've got all your records as to what your gross receipts were. I'm sure, I can say I'm sure that if it wasn't provided to the CDA, it wasn't trying to hide something. It was just a question of, do tenants and landlords always read everything the lawyer puts in the lease? My experience, no. So I would certainly say that there's no reason why yearly receipt information isn't provided. Has it been provided, Earl?
No, I haven't.
Well then, give it to us.
And,
I mean, and again, this whole issue.
Is that a business license?
It's your gross receipts.
Yeah.
Well, it
Gross
should be,
receipts and rental.
it should be the same as what you put on business license.
Exactly.
Well, and
So that's there. Was it done in the form that I put in the lease? Did I go back and say to Earl, you need to give this certified? No, I didn't do that. So if that's my mistake, that I didn't go ahead and say, provide it in a certain way, then I'll take the blame for that.
Now, in your opinion, and again, I'm like Mr. Taylor, I'm not trying to put you on the spot because I realize you hadn't read this.
Okay.
Okay. Are, requesting the financials, if you were sitting in my spot making this vote, and according to the lease that we can request supporting documentation as we deem reasonable, is that an unreasonable request to see where the taxpayers' money is, how it's being spent? And that's the whole issue with this.
Sure. So I can answer my opinion on that. And again, I would say that it sounds like the lease has a provision that you could request information to confirm the town received the right amount of rent. So yes.
Excuse me, the CDA.
Sorry, the CDA could
The
confirm.
CDA.
Yeah. two different entities, my apologies. Yes, that you could have requested and should have been provided if it requested the amount of gross receipts to make sure the town got its rent. But
Okay.
as far as expenditures, no. I don't see why a landlord would ever need to know what was spent in a landlord capacity.
Even
That's
when-
different than maybe what you're maybe asking me, but you're
Well-
asking me about a lease and a landlord.
I understand.
Yes,
So, and I know we're going to play semantics a little bit, but my question is, when we're dealing with taxpayers' dollars, wouldn't you be in favor of the most transparency that can be provided?
And which taxpayer dollars are we talking about?
The taxpayers' dollars that come from the 1% or the 1 cent tax that has gone to the CDA, that is funneled or forwarded to the Colonial. That's the whole question. And, you know, unfortunately, we heard a lot of very wonderful, well, I don't say unfortunately, that's not true. We heard a lot of wonderful testimonies about the Colonial. I think we all agree
Right.
with those testimonies. This comes back to being able to be responsible fiduciaries, following the lease, following the CDA bylaws. That's what this is all about. And I just don't see how any of us can vote in good conscience not knowing where this money is going. Now, a private LLC, I own a private LLC, absolutely. And I can do what I want to with that money.
Right.
But when I'm accepting taxpayers' dollars, that's a whole different deal. And our taxpayers have asked for transparency. That's what this whole issue is about. And the way it got misconstrued and mispresented to people last time was real unfortunate.
Okay.
That's not your fault. But, you know, this lease lays a lot of this out, and I think we should give you a copy, provide you with, Kim, can we do that, or make a copy? And
Sure.
I mean, I think it would help him answer our questions.
Yeah, and just an FYI, on this, and I think you raised it, raised the question, because going back, you know, the CDA had an executive director that ran the day-to-day affairs and kept the board apprised of these things. I'm not aware that this information was ever requested. But I did go to the Colonial. I went to Earl and said, you know, this says this in the lease. Can you provide this information? And he did have this certified or notarized copy of the Colonial receipts by year sent over, and it's notarized by Beverly Edwards, that has the receipts from 2015 by year up to this most recent year. And in 2015, there were 92,000 and change. 2016, almost 115,000. 2017, 149,000. 2018, 97,000. 2019, 104,000. And 2020, $20,000. So I asked for it, and this certified or notarized copy.
Well, notarized is not the same as certified,
It's
but
notarized, but when something is, you know, signed and witnessed, I mean, that's.
yeah.
But this is what they are required, I believe, by the lease is the information about the receipts.
Yeah, and I don't ever remember, anybody asking for that.
I don't think it really was ever asked for.
I do not. If it had, it would have been presented to.
But again, I don't think certified and notarized is the same thing. It's not.
And, you know, and I just want to bring up, to piggyback on a little of this.
Sure.
I don't know a lending institution in this country that I, Gavin Honeycutt, could go in and say, I need $155,000 to $175,000, and they stroke me a check and I walk out the door.
Right.
That just doesn't happen in America. This is about, again, checks and balances. And because it was brought up in our budget meeting, the taxpayers have been asking questions about where the money's going. Provide it, like I would have to do. You know, I guess I could come to the CDA and ask for $175,000. I'm a private LLC. I have things, I bring people in from all over. I mean, I do business everywhere. So, I mean, maybe I should ask for $175,000. You know, I guess you see the point I'm trying to make.
Sure.
And as a new council member, I don't want to be held legally responsible or have to answer to my constituents that, you know, Gavin, why did you approve that? You've taken my money and give it to somebody, you don't know where it's going. You can tell me where it's going, but until I see it in black and white, I don't know that.
Okay.
Let me ask you this, and because I don't know.
Sure.
If, and this is not an accusatory statement, I want to clarify that 100%. If something were proven to be nefarious or unethical,
Right.
that as a town council member or a CDA board member, if anything were ever not on the up and up, can we be held personally responsible for those decisions and appropriated monies?
So you loaned the money, right? Right.
Well,
The CDA officially, the CDA was my understanding, CDA was a pass-through entity, got the grants, got the tobacco commission money, got the town money, and then loaned it to the Colonial. And I think we've got something a little different that neither Brad nor I were involved with. I think you're asking questions about, and this is, I've just recently heard of this, that the town of South Hill is contributing a small amount of money every year to the Colonial.
well, actually, I think it's a large amount of money.
Well, whether it's a small amount, a large amount, it's money.
Correct.
And that, actually, I've not been involved in. That's a separate issue from the way things were set up, from the way things were renovated. That's a political question for you all to determine whether you think that's an appropriate use of money that Earl and the people in Kim and the people in South Hill should address. I mean, I don't think us Richmond lawyers ought to be getting into your business about what you should be doing with your funds. If you came up to the Richmond City Council, I'd say, what are you doing there? I'm just, that's my gut feeling.
Well, I guess we would ask, wait, is Mr. Butts here? He's our local attorney. Is he here today?
Do you understand?
I guess who would be
Yeah,
would be our local attorney?
Your city attorney has to answer
Our town attorney.
Yeah, sorry.
Okay,
Town attorney
sorry.
has to answer your fiduciary risk and duties.
Just as a lawyer who's been around for a long time, I know you've got some sort of qualified
Yes, sir.
immunity.
Yes, sir.
And do I know the details about it? No, you all probably know the details. We've got on the city council, you've got some sort of immunity, just like a judge does. If you make decisions based on what you know. But you're right, you should be asking your town attorney for
Thank you.
specifics on that.
Thank you.
Makes
Thank
sense.
you.
You understand my question?
I have a
Yes, sir.
question, please. Mr. Gecker sent me, and here was my question.
Okay.
Can you give us a list of other private LLCs that you are aware of, and do they operate in the same manner as far as public funding, unwinding, etc.? He listed Maggie Walker Government School, Appomattox Regional Government School, the Beacon Theater, the Prizery in South Boston, Academy of Music Theater in Lynchburg, which I'm not familiar with. Are they still private LLCs or have they unwound?
Typically, after the 5-year period, the normal course is to unwind, right? I mean, that's the normal course. You have to stay in the 5 years for the credit issue, but after that, they typically unwind, and there's multiple ways to unwind. This situation, I believe it was at the request of the CDA or someone to continue as the current structure, because I don't think the CDA wanted to take over the operation of the theater at the time of the 5-year typical period. But there's no requirement that you have to unwind in a particular pace. You just can't do it earlier than the 5 years. So now it makes sense to unwind, and the question is how to unwind, and this is the proposal that right now has the approval of the owners of the LLC, is to donate to a new nonprofit.
Well, if we could go back to Maggie Walker, has Maggie Walker
I have to admit, I couldn't answer directly any of those questions. I just know, I was not involved with them.
Okay.
I just know my daughter went to school, one of my daughters went to school there, and I know Dan Gecker was involved. Generally, I agree with Brad, they generally unwind 5, 6 years, sometimes they do 6, just to be on the safe side. So most of them all unwind. This, my understanding was, it just never got done, but there's no requirement to be unwound.
Understand.
But can I answer, has it been unwound? No, unless you have.
I mean, the other deals I've worked on, yes, they don't last very long after the 5 years, 6, 7 years, and they're done. So yes, I've seen them unwind, and there's multiple ways to do it, and this is one permitted way to do it.
But the way we're doing it is not unheard of.
Oh, no.
It's not outside the norm.
No.
It is the norm.
Correct.
It is the norm.
It is the norm.
You transfer the assets to a nonprofit.
Okay.
Just the question of which one.
And how long has a private LLC been in existence?
Would have started basically to do the tax credit deal, right? 7 or 8.
2008.
So almost
And I will tell you, a couple of years ago,
17
we
years.
were ready to
13, I'm
unwind.
sorry, 13, I'm sorry.
We were ready to, as a matter of fact, I do not know the details, but the CDA and the chamber, there was something, and I know, and Kim has made this, he's put this out for y'all saying that request, can you see about letting it go another year? I was ready to let it go and ready to let it go. So I said, let me see, and I called Dan Gecker. He had to get in touch with the others, and he said, yes, you can do it. So they were ready to gladly ready to it, but we were asked because of some conflict. I don't know all about the conflict, and I talked to Mr. Gecker. He said, yes, you can, but go another year.
Yeah, I remember you calling me and said, is there any legal reason we can't go another year? And I said, no, you can go as long as you want to at some point. It makes sense.
Actually, 2099. I think it's in the lease or something, David. 2099 that LLC.
The LLC has a way out end date. But I do remember you calling me and saying, is there a legal reason? I said, no, do it when you want to do it.
I think you had a question.
Yeah, my question was, so basically what I understand from the beginning, this can be unwound theoretically in about 2 weeks?
Tomorrow.
He's doing
That answers the question.
If you
I think
want.
it answers the question for a lot of us. I mean,
What would happen if, why can't we do it tomorrow? I mean,
We could.
who are the players? Who do you need? Who are the players?
The owners of the LLC have to donate the interest. That's it.
Okay.
And they're ready to do it. I have their permission.
You have the CDA's permission
The
to do?
owners of the LLC.
Oh,
are
okay, the
ones
owners of the LLC.
have
I'm
to
sorry.
donate it, the interest, and I have their agreement based on what we presented to do that, and they're willing to do that.
And if the CDA is not in agreement, then the theater's just there with no one occupying it?
No,
Okay.
if the owners are not in agreement with donating it, and they don't donate it, that's a potential situation where the CDA has a theater that doesn't operate.
Okay.
But as long as the donors are willing to donate it, then we could tomorrow have that happen, and now the nonprofit owns the LLC or has the right to run the theater under the lease.
And this is also an important timing point that you just made very politely, which is
I
that
didn't know it was polite, but I'll try to be.
it was, because while we've heard much about what the CDA expects, the private investor also, what you're not saying, what I'm hearing is that they have no incentive to transfer the existing assets or whatever assets exist until there is assurance or action by the CDA that they will move forward with their obligation, much like we would in a real estate transaction with the buyer and seller. These things happen simultaneously with some honor, but basically on paper. Is that right?
I mean, I think the owners of the LLC want to help the town, right? because they could sell it to someone. I mean, they don't have to give the interest to anyone. That's a right they have as the owner. But they have agreed, because they believe in what's being done and that it's a good thing, for no consideration, to give their interest to a nonprofit, which then makes everything it owns in the nonprofit world tax exempt and can't spend it for anything other than tax purposes. So they could do that tomorrow with or without the CDA's input. That's their choice. I think everyone's best interest is to all be on the same page. That's the goal. So I think that's why we're here today. But no, I think from a purely legal perspective, tomorrow they could do that transfer, and now the nonprofit is the party that's in control of the Colonial.
When is the CDA meeting, Mr. Callis? The next
Tuesday.
So with that being said, when would the financial part be available?
Which financial
From
part?
the LLC over to us.
The nonprofit will make available its 1023. As far as the LLC, I don't know if and when
But
the
the 1023, when would that start? When will we be able to see what's going on as far as that part of it?
Well, my hope was to file it very soon. But again,
We gotta get
cart
the
horse. So
Once we do that, I mean, how long does that usually take? As far as
I mean, I think I have the 1023 basically finished. So, we could definitely have it soon. A couple weeks if the plan's all in place. But again, what I have to disclose to the IRS is the plan. And if for some reason the plan changes, that, changes the whole application.
I did hear you earlier. I think I want to make sure I heard this correct. That, to your knowledge, there's no agreement between the CDA and the Colonial, whatever LLC you want to talk about. There's no obligation stating that they would have to re-rent the property to that organization. That
At the expiration of the 40-year lease, no, there is nothing that has to be. That's totally up to the CDA what it does with the property.
So what I guess you're saying is, even though you haven't read the lease, you're telling me that we can't terminate the lease.
I don't think so.
Now, if they dissolve or found in default, does that dissolve the lease?
Oh, the lease, yeah, I mean, if you have a terms of default and they don't comply
Page
with
6.
default by the tenant, yeah, they have to abide by all those things that they agreed to, yes.
And that includes providing financial documentation.
Oh, yeah.
So if they have not done that,
Are you asking whether the lease is currently valid? I don't know. But as far as if the nonprofit becomes the owner of the LLC, yes, it must agree and comply with any of these lease terms. Absolutely. Can't get out of that.
I guess I agree with Councilman Moody. It's just, 40 years is a long time to predict and project, and it's really strapping the possibilities what could be done even with that same group.
Yeah.
And I'm not saying that we shouldn't. I'm asking questions. They're not accusatory questions, but I just disagree. I think once you read the lease, you may have maybe you will have a different perspective on it.
Right, question.
Yes, sir.
I think most of us are familiar with payroll protection plan. The dates change, and I'm assuming somebody can still apply for that, to your knowledge? I
don't know if the last window's open or not.
But if it is not open and the LLC is gone, can a 501(c) apply for PPP?
Yes.
No questions.
There's always a depends, right?
Of course.
The larger organizations have some limits on what they can do, just like the for-profit had limits on the number of employees and things like that. So the rules are the same. So if we had a very large nonprofit with over 500 employees, I believe, then no, they wouldn't be eligible. But I think based on the current,
If the window of opportunity is still open,
yeah,
then they would be able to apply for it.
Right.
To your knowledge, do you know if they applied for the PPP?
I do not know.
Do you know if they applied for the idle loan through the SBA?
I do not know.
Do you know if they
They're here-
applied?
They're here to speak on what's needed on the formation and of the nonprofit and the LLC. They're not here to speak about day-to-day operations because they're not familiar.
Right. But I'll answer your questions. No, I don't know.
All right, I got
Yeah.
you.
So,
Question, because I'm hearing this, a couple of people hung up at the 40 years.
Yeah.
The Colonial's been very successful for the last 12, 15 years.
Right.
Hopefully it will continue through the 40-year.
Correct. That's
Will
the
an operating agreement between the Colonial and the town of South Hill be appropriate after the unwinding?
operating
Well,
agreement between.
Well, certain number of professional performances, I believe they do
Oh.
4 or 5 now. We have local theater.
Gotcha.
We have Christmas programs, we have.
Sure.
Is that something that maybe the CDA could enter into contract with the Colonial?
So where I see that happen,
Okay.
because that's a really good question,
Okay.
is restricted grants. So if the city or the CDA wanted to condition money that it sends over going forward, that is where you build it in, and it's absolutely appropriate.
Okay.
But not under a lease or things like that. But yes.
that would give the town,
Oh yeah.
that would give a guarantee
Mhm.
of a certain standard that would
Correct.
continue. And I think the community has been very satisfied with the standard.
Right.
Although the standards could change, and
Sure.
we've got, we're going in a whole different direction.
Right.
But that way, we could guarantee
Yes, restricted grants.
community input.
Mhm. That's the way it should be done, and it's very common.
Okay, thank you.
Is there any advantage or disadvantage that you can see? I know that the meals, the 1 cent tax funding has been done in the past in one lump sum. And I know it was
You mean paid in a lump sum?
paid in a lump
Sure.
sum, normally in July. I believe that's correct.
Right.
You know, and piggybacking off of what Councilman Taylor just said, you know, can that and should that amount be prorated based on performance? Do we have to give it at one lump sum? You know, because in the past, I guess we've given this money, and I'm not saying that they have not fulfilled their obligations, not what I'm saying. I'm saying, to Councilman Taylor's point, it hadn't been any requirements to do any shows.
Sure.
It hadn't been any requirements to apply for PPP.
Right.
Or seek other funding.
Right.
You know, we're just, if you sell 10 tickets of 200, it really doesn't matter, the funding is there. Could we look at, would it be appropriate to tier that funding or allocate that funding based on numbers, you know, as they need it, instead of writing one lump check?
I think as Chairman of Budget and Finance, and Ms. Brace is here before me, it's always been a line item, a request. Asking you shall receive, or maybe you don't receive. And taking what you just said in consideration, I think as long as there's a need and the shows are up to a certain standard, and obviously from what we heard last week at our council meeting, the community is very supportive of local theater and what the Colonial has done and is continuing to do. So
My
I
only
think that
caution.
Budget and Finance and Council would have to look at that each year as we would
Yeah.
any other requests from the chamber or whomever.
My only caution is representing a lot of nonprofits is be very careful in your restrictions, because when you become overly burdensome and restrict the monies, you run into a situation where a nonprofit may have cash but can't carry out their mission because they can't meet your requirements. So it's always a fine dance between donors or funders and a nonprofit to make sure that the restrictions are reasonable and that they can be met, and that, you know, the money is going to be used for the intended purpose at the end of the day, which is to have
Right.
performances and to benefit the town. So
But I
I don't
guess we
disagree with your approach. I'm just saying be careful, because sometimes it can hamper the nonprofit's ability to actually do the good things that you want
And
it
that
to
we
do.
don't want to do.
No.
But I guess that could be done between the CDA and the Colonial. We could sit down on a yearly basis, almost a marketing plan, if you will, or a business plan.
Right.
And as you do these shows and you need this money, we're going to write you a check instead of just doing one lump sum.
Are we talking about the, 1 penny tax?
But before you get to that, to your point,
Yeah, are we doing public input or?
to your point on that, because the town is providing the funding, we need to determine carefully if there's going to be an operating agreement and,
Yeah, the city attorney or town attorney needs to look at what your options are.
yeah, I mean, if there's gonna be, because the town is the one doing the funding, the town should be
Yeah.
who's party to
Right.
the operating agreement, not the CDA.
Right.
So,
I'm just telling
Whomever.
you, to the extent you do restrictions, please be careful. Since I'm representing the nonprofit, these are the problems I see, and I have to go and renegotiate and fight to make sure the nonprofit can do what you want it to do. So that's my only caution. Yes, the town attorney needs to advise you on what that is. I'm just telling you what, from the nonprofit perspective, is it done? Yes. Please be careful.
Gotcha.
But to Councilman Taylor's point and Councilman Moss's point, and I asked, and I'm gonna go back one more time just for clarity.
Sure.
But what I heard you say in the beginning is the LLC could be dissolved in the agreement, and the 40-year would go away. Did I not, I heard you say that correctly?
So I said that the LLC could be dissolved. I have not read the lease, so I'd have to look at to see what happens and whether that's a term of default of some kind. I don't know the answer specifically to that question, but as I think Alex said at the beginning, the parties are always allowed to renegotiate, but they have to come voluntarily to that. The current plan is for the LLC to be there, and so it would be the tenant, and this lease would stay in place. But that's for future discussion.
Okay.
So, to be sure that the board are clear, back to Mr. Moss into Ben, if the council allocates funds to the CDA, a lump sum of whatever, I'm gonna pick $150,000.
Sure.
The council would have the right and the authority to hold half of it until January the 1st. We allocate in July. Can we do that? And is it advisable?
So,
to be done?
from the nonprofit perspective,
Yes.
obviously, funders decide what they want to do and when they want to pass money.
Yes.
From a nonprofit perspective, quarterly at a minimum is desirable because of a cash flow issue.
Okay.
Are there grants that come once a year? Sure. Now, what the town can do based on its current, approvals, what it's approved with the 1% and the granting process, that's something the town attorney has to address. But I'm telling you from a nonprofit perspective, the more regular cash flow, the better. Because if we have to, otherwise what happens, and nonprofits have to borrow money
Right.
and pay interest, that's silly. Like, why are we paying a bank if there are funds that are earmarked? Let's get them to the nonprofit. So I see things that are coming in at least quarterly. But I don't know what your current approval has, and that may.
well, just to clarify, in the town's budget, contributions are made to a variety of
Sure.
organizations, business education partnerships,
Right.
so on, agencies on aging. For the Colonial Center and for the Chamber of Commerce, because the CDA owns both of those structures,
Right.
both of those buildings,
The money goes there.
the money from the town to those organizations has typically been funneled through the CDA.
Sure.
And then the CDA would turn around and pass those funds on. Is there any reason why the town can't make those, it would simplify things for the town to make those payments directly to the chamber or the Colonial?
So once the IRS approves the 501c3 determination, yes, you can do that.
Okay.
But I would not until.
Okay, thank you.
But
that would keep it much simpler and cleaner for everyone.
And there's after submission, there's a 4 to 6 month current timeline as far as getting the IRS letter. Maybe a little more on the 6 to 8 month, given the current, they're staffing back up. So hopefully it's more for. But I found out from a colleague that they just processed her 2019 tax return that she mailed last week. So I'm not promising 4 months. I'm saying more like 6 to 8. But that's the current what we're seeing. But yes, then at that point, the town could donate to the 501c3 or can transfer the money.
Now, if we forgive that note,
Yes, sir.
the CDA forgives the note, does that show up as income for the LLC or the investors or
The nonprofit.
But not the CDA.
No. Look, maybe I'm not asking it right. If we forgive the note, whomever owns the LLC that the note is with,
Right.
do they have to show that $3.8 million is income?
Yes.
And they would get a 1099 or 990 or something? I mean, are they aware of that? That they're going to be responsible for paying taxes on that money?
Excuse me, that's why it is a good idea to go to a nonprofit situation, so that the note is forgiven. I mean, legally, as I said, it's my opinion, the note's not enforceable, but put that aside, it's not forgiven till it's forgiven. It certainly makes sense to forgive it when the nonprofit is in charge, because then there isn't any tax implication. That's one reason, among others, I think, and I don't know the tax credit investors, but I would think they would like to get rid of this thing, and, instead of trying to sell it or want to give it to a nonprofit that you formed, and then the note is forgiven, and it doesn't matter that the nonprofit has officially that income.
So does that mean that, trying to think through this in my head,
It's a question of timing.
well, does that mean that the people have gotten the tax credits, approximately $1.8 million, if it's 45%, 25 federal, 20 state, approximately 1.8, that they've benefited with it, really from the taxpayers' dollars to get these tax credits, with getting the GO bond and some of the other grants that we fronted the money for. They have gotten the tax credits for 10 years, however many years it is, and we're going to forgive the note, which we have all been told doesn't represent money. Now we're learning that it actually does represent money. And they don't have to pay any. I mean, is that what the law is, that they don't, we're just going to forgive it, they walk away, and we go back to a 40-year lease with a nonprofit? Is that what you're telling me?
Mr. Martin, just so you understand the basis of your question, the investors don't get the benefit of money they didn't put in. In other words, the tax credits are based on what the expenditures are, but they go ahead and put the money in. I think it was 80 cents on the dollar, and the idea that they would pay out that money, and they didn't get the money for something that someone else spent.
They had reduced tax liability
They had
at the
reduced
time.
tax liability at the time. They bought that by putting in their contribution.
And families all across America enjoy federally permitted tax credits.
Exactly.
This is no different. It's bigger,
Right.
but it's not cash in their hand. It's not even diverted. It's reduced tax liability.
Exactly.
Okay.
So the typical unwind would have a structure just like this. This is not uncommon. The property would be transferred back to a nonprofit, and no one would pay tax on cancellation of indebtedness income. So this is part of how the tax credit
Say
structure.
that, I'm sorry.
Sorry.
My wife says I have selective hearing. I can't.
It's quite okay. So you asked earlier about the unwind, and is this unwind how it's normally done? The answer is yes. Typically, the assets go back to a nonprofit, and there's no recognition of cancellation of indebtedness income. That's part of how the structure is typically done in the first place. So this is not unusual in the structure. That's how you unwind them. So normally you would not pay any type of cancellation of indebtedness income on this. That's how they build it in the beginning this way to accomplish it this way. Because that's the incentives to invest the money, to get the tax credits, to unwind without a big tax bill.
Because you can't sell the tax credit, but I guess the incentive is invest and you have access to the tax credit.
Right.
So you really, I guess you are selling them without selling them. You're selling them access.
There was a case that went all the way to the Fourth Circuit. It's a yes. It's lawyer speak for yes. So yes, but this is not uncommon. This is not out of the ordinary. This is the unwind. You're just now at the point, instead of 2013, we're in 2021, but this is how it's unwound.
And it was suggested as well that the CDA maybe gift the building to, I guess, which would now be the nonprofit.
Right.
What are the advantages and disadvantages of that?
Well, now that it's going to be a nonprofit, the CDA it's permitted to transfer money from a nonprofit to a nonprofit. There's no prohibitions or restrictions. And so it's just a question of whether the CDA wants to continue having that real estate on its books and incur the liabilities that come with owning or being a landlord. But by having the nonprofit in place, now you're permitted to do it where you couldn't do it before. Now you're permitted. It's just a question of whether the CDA wants to continue owning it or not. And that's a choice as far as.
I was under the impression that the CDA would continue to own it, and there would be a lease agreement as far as.
Correct. He's just asking, could you?
Could you?
That's a different question.
Okay.
Yeah, because it was presented as an option. I'm just
It is.
trying to
It's permitted.
get all
But that is
information.
totally, if the CDA wants to keep the real estate, they keep the real estate. If they don't want it on their books,
It's a cost benefit analysis is all it is.
absolutely.
I
And
mean,
it's
if the
totally their
CDA
choice.
keeps it, you have to insure it.
Right.
You have the liability if something happens.
Right.
Over there, if you gift it or donate or transfer it.
To another
The
nonprofit.
CDA is done with it. You don't have those costs and liabilities. But that's something for the CDA to evaluate what makes the most sense.
Could that be done if it were gifted, that if it ever unfortunately failed, that it comes back?
Yeah. You
Or
can
once it's gifted, is it gifted?
No, you can put reversionary clauses in that. It's up to you. It's up to the owner. What we typically see is if this, then this. So typically it's if we give it to you, but something happens, you then transfer it somewhere else. That's a normal common.
And my last question.
Sure.
I
did not stay at a Holiday Inn Express last night.
No.
Sorry.
My
That
last
wasn't your
que-
last question.
My last question that I know of is, that was a good one, is by the town essentially in the past have been funding, or even currently now, I guess, if this is set up before the budget's passed or not, in your opinion, and it's, have we opened ourselves up to funding other private LLCs?
No, I mean, the whole point of using the private LLC was to get the advantage of the tax credits. You never would have been able to get an investor to do what they did had you not structured it the way you did. So you would have paid a lot more money to renovate the Colonial had you chosen not to go this route. It is very common to use the qualified rehabilitation tax credit structure, and you set it up all correctly, and you did all the things, the checks and balances, and you had all the fiduciary duties that you needed to get it done. But had you not chosen that, you'd have spent a lot more money.
How
If
much
we-
more hypothetically would you say?
Oh, I mean,
Just rough, just ballpark.
a couple $1 million at least.
How much?
A couple million at least.
More than what was done.
Oh, yeah.
Right.
More than that. Because you just don't do this structure without, I mean, the federal government puts these structures in place to allow you to benefit. You took advantage of it like you should have as a good town council and a good CDA, and you got what you wanted, which is a great theater.
So we're looking at, it could have cost us roughly a third more.
Oh, yeah.
Okay.
Easily.
Well, it would have cost the town double what the town put in, because much of it was made up in grants.
Yeah.
But my and maybe I didn't phrase it right. If Honeycutt Inc. comes and puts in an application.
You have not set a precedent.
That's what I'm asking.
No, sir. No.
And that's why?
Because the benefit to the town of what you did is so crucial that unless Honeycutt has a similar theater that I don't know about, I don't see how you've set any type of precedent. That's a one-in-a-lifetime kind of place that you have that's beautiful, and you have it. Other places don't. So unless you got some historic place that I don't know about, then no. I don't see how you could establish any type of precedent.
Okay, so what we want to be clear on, because the CDA meets on Tuesday.
Correct.
And we want the CDA to be able to carefully consider what needs to be done so that we can, at the direction of our council, move this process forward.
Right.
So, we have the long-term lease in place. And unless that needs to be renegotiated by both parties, does anything need to be done with the long-term lease at this point?
No.
Okay. And then we have the debt, the secured credit line
Right.
note. Forgiveness of that makes this process
Simpler.
much simpler.
And it's essential to the nonprofit to operate
So
with it forgiven.
for us to be able to do that, it's essential that that the CDA forgive the
The
credit
nonprofit will not be able to operate
without doing that.
without that. Now, whether it's enforceable, I don't know.
The only thing.
I'm not going to get into that. I'm just saying.
I'm agreeing, I'm just saying that the CDA should forgive the nonprofit, the newly formed 501c3, who is the successor to the interest. So there's a question about which entity is being forgiven.
Okay. Could I ask one of you?
Yeah.
To just email me the language for the appropriate motion
Sure.
to make that happen?
Yeah.
Well,
Thank you.
no problem.
Yeah, right.
So, I'm just, all this is winding. So what you're telling me is these investors, whoever these private persons are willing to forgive what they put up front, which seems like $3 million or whatever it is.
I don't know what they invested, but yes, they're willing to give it away.
Just give it away.
Yeah. So the CDA, the Colonial Center, the new nonprofit, would have all the assets that are currently owned by the LLC and can start operating as soon as we pull the trigger. And if there's still a loan on the books, then we got a problem, because now we have a Colonial Theater and the funding model completely changes, and I don't know how it works at that point. So that's why I think it's in the best interest of the nonprofit to not have a liability on its books.
Okay, so on Tuesday,
Yes, sir.
we'll get that language so that the CDA can consider forgiveness of the note. And in terms of assigning the lease,
At the moment, that's not necessary.
it's not
If
necessary.
we later decide that we want to liquidate or dissolve the LLC, we need to have another discussion about what the CDA and the new tenant
And
wants to
and
do.
the CDA can wait.
Yeah, there's no.
to hear.
I don't
Okay.
need that right now.
Okay.
Why would we not get all of that straight up front?
You could
From the
have
CDA's perspective.
Sure. So you could have
mean-
a granting language that say that the CDA authorizes the renegotiation to the extent it's needed, and we could put language together like that, or authorizes the Colonial Center non-stock to take over the lease to the extent the LLC is dissolved. If you want to put all that language in, yeah, we could do that. I'm just saying you don't have to yet. It's up to you.
So we can talk about that on Tuesday, whether the
I'll
CDA
present language for both, and then
Yeah.
you can decide if you want to. It's just not required. Be your choice.
What would happen if the CDA says, well, you know what? We've got this beautiful venue over here, and we want to explore other options, then what happens?
You're in violation of your lease. So whatever your default terms for violating your lease.
Which you haven't read yet.
Right.
They
but
may already be in default.
Well, again, you're asking if the CDA defaults. If they default, I think that the normal course is that the tenant would go to court and make you enforce it, which says you have to agree to your lease until it terms
Right.
expire.
I understand.
Why would you want something else?
I'm just asking all of the
Hypothetically?
possibilities. Sure. I'm just asking all the questions.
So this is clearly not a simple matter. Are there other questions for these two gentlemen?
Well, I appreciate your time. It was nice to meet all of you, and I think you have a great theater, and I think you have the possibility for great success in operating a theater. It's my pleasure to work with this team to put it together, and I think we can hopefully continue to work together in the future. So it's nice to meet you all.
We'd like to thank both of them very much.
Thank you for your
so
help.
much. All right.
Thank you, Alex.
What we will do is the CDA will address these matters at its meeting on Tuesday.
Thank you.
And, we'll get the language from them, and the CDA will address these on Tuesday in keeping with the council's direction.
Kim, do you, and whether it's the loan is stale or not, rather than promissory note is stale or not, I know that's another question, but, how has that gotten where 5 years now all of a sudden it's stale? Nobody's kept up with this stuff. It's just very unfortunate,
Well, I think everybody trusted what was going on at the theater. You had a former mayor doing this, running it. The council at the time put their faith and trust in him to do it, and he did it. And as in terms of the information, the CDA would have relied on the executive director to ask for that as part of the day-to-day responsibilities. Apparently it wasn't requested, but I got a copy of the receipts because I did ask for it, and we know it never got close to that $250,000. And so now we know what we need to do to convert and move forward.
I mean, it's good it wasn't a real important document that just fell through the cracks.
Anything else, council, or anything, CDA members that may be joining us by way of Zoom?
Robin and Kim, thank you both for being here too.
Okay. Meeting adjourned.
Thank you.